In this video, I want to talk to you about 3 dangerous stocks to be in right now. All right, 3 dangerous stocks, and they're going to be some of your favorite stocks. So we need to go through them and look at them and find out why they're dangerous to be in right now and talk about what we should do. So we're going to go down through the list, and as you can see here on the list, they're Apple, CRM, Salesforce, and Microsoft. And of course, we're going to start with the Qs. Now, why are they dangerous to be in right now? Well, let's go do a little technical analysis and read the charts, all right? Now, these are high flyers. These are some markets that have really been going wild. So if you're in them, you've made some nice money, okay? I've liquidated all my positions out here. Could that have been the wrong thing to do? Could these things still go to the moon? They certainly could. It always feels like you're getting out early. That's generally the right time to get out, all right? So let's go and take a look at this thing. Now, the reason I'm saying that it's time to get out of these markets, or at least not be buying them, right? If you're going to be doing an accumulation process over a multiple year series of times, you might not want to liquidate. If you got tax issues that you're dealing with, you might not want to sell them. But let's go ahead and analyze these markets. First thing I want to point out is this is a beautiful Elliott Wave, almost right straight out of the manual. Okay, there's drive 1. There's the pullback to drive 2. Here's drive 3, pullback to drive 4, all the way up to drive 5. And that's where we're sitting right now. We're at drive 5. Now, probabilities tell us we're going to get an ABC blow off top whenever that happens. So that's why I'm saying these stocks are dangerous to be in. So this is the Qs, and we're getting a beautiful 3-drive pattern, as you can see, on the Elliott Wave. Now, does it mean it can't go to 4, 5, 6, 7, 8, 9, 10? No, of course it certainly can. It's just the probabilities tell us that at this point, above the 3-drive, we as small speculators, probabilities are not good for us to be buying and getting into this market, all right? So that's why we're looking for these markets to blow off, give us a 3-drive pattern back down, a little ABC. Then we can start looking for a reset and a new rally on these markets. So we got Qs, and I'm going to come in here and start off with Apple. And Apple had a big, beautiful drive right here, and now we've got 3 drives one more time. 1, 2, and 3. And so I'm looking for this. We're going to come in here and just draw our Elliott Wave in there. And I'm going to start the Elliott Wave from these last 3 drives. Drive 1, pullback. Drive 2, pullback, and now we're at the peak up here, drive 3, and I'm looking for a little bit of an ABC profit-taking pullback. Does that mean that it can go up higher? No, it certainly can. It's just a dangerous place to be buying new shares of Apple right now because the probabilities are that we're going to get a profit-taking blow-off. Now, Apple just had a big presentation where they released a whole bunch of new products and told about all the great, wonderful things that they're going to be doing. And so this was the run-up to that. So this is buy the rumor, sell the fact. All right, so the rumor was they were going to come out with all kinds of great, wonderful new tools, which they did. And so that's why the market ran like it did in anticipation of all these great new things. So now they've come out, they've announced them, and they're saying, oh, wait, the big, great new thing, which is this mask headset thing that they're announcing, isn't going to be available until next year. So put a little damper on things, all right? We're not going to get this thing tomorrow. We just get to look at it today. So in anticipation of that, we got a nice, beautiful 3-drive pattern. I think we're going to get a little ABC. It's just a dangerous place to be buying new shares of Apple right now. Let's go in and look at CRM. Same thing. CRM's coming in here with a beautiful 3-drive pattern right straight out of the manual. Come in here. That's the first drive. This is the second drive. A little bit of a retracement going into that 3rd drive high. And now we're going to anticipate probabilities. Again, probabilities tell us that we're going to get an ABC blow off up here, which is then another opportunity to buy low and sell high. We don't want to be buying right now if it's really high. This is a dangerous place to be buying CRM. So if you're in CRM and you want to hold on for tax purposes, whatever you think that's going to go down and then rally once again, bully for you, do that. That's okay. I'm not saying you should jump out right now if you're in. I'm saying it's a very dangerous place to be buying new shares if you're dollar cost averaging in, because you're at the top of the 3rd drive of an Elliott Wave pattern. And we generally see a blow off an ABC top at this point. So here's Microsoft. Again, perfect Elliott Wave right straight out of the manual. So we come in here from the red drive. We're going to come in with this is their first drive 1, 2. This is 3. We're going to come into 4, all the way up to 5. And now we're looking like we want to blow off and come out of this thing with an ABC top formation. Now, again, one more time, does it mean it's going to happen? No, it could go to 5, 6, 7, 8, 9, 10 drives. Obviously, it could. But for us as small speculators, that 3rd drive is a pretty high location, and the probabilities of it going up like that any further pretty low probability. We want to buy low and sell high. We don't want to be buying high and selling low. You can always buy high and sell higher. Okay, that's okay. But right now, the probabilities on these three stocks and on the Qs, because the Qs is very heavily into these three stocks, telling us it's a dangerous place to be buying right now. I want to bring that to your attention. There are some other stocks we'll be talking about this week that are in a great location to be buying right now, a very safe location. It's safe to be buying when the markets are very low, right, in anticipation of a rally. It's very dangerous to be buying when markets are very high with the possibility of a blow-off. So we want to buy low and sell high.